Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. And we're getting ready for another day of trade. Dipan Mehta, Director of Elixir Equities, has been sitting by patiently. Dipan, what do you do with a stock like Tata Steel now? Of course, numbers have been weak. The European market is under pressure. But this is such a volatile stock. Do you think at some point it deserves a buy? Is there merit in buying the stock, or would you stay away?
So now it's best to avoid all commodity stocks, not just Tata Steel, but Hindalco. You know, my view on this sector has been very negative, and this particular performance of Tata Steel only builds that conviction. In times like this, you don't want to get into such volatile stocks. There are so many opportunities in the commodity consumers, and one should focus over there. It's very difficult to have a handle on what prices the metals will trade at, and keeping that in mind, you can have no visibility of earnings for all these commodity companies. Optically, they are cheap, no doubt about that, but they never really create value or give solid appreciation.
Okay, all right. And for starters, the Tata Steel stock in pre-open, there appears the initial tick as well. I guess that will settle down and showing that it's likely to open up with a sharp downtick. I think we're just getting the initial rates that are coming in there. But Dipan, you don't like metals and commodities. What about pharma? Divi's Laboratory, well, it used to be a darling. Now it's half from the top. And valuation-wise, well, maybe it's trading more attractive than what it was at the peak, obviously. But business is still uncertain, and the management refused to give guidance on the margins for the next couple of quarters. What's your sense on the stock?
Nigel, I think some structural changes taking place at Divi's Laboratories. And earlier it was the custom synthesis business which was really driving the growth and the margins. But the ratio of custom synthesis has reduced drastically to around 40% in the last quarter. And the low margin generic business is what is contributing higher and higher revenues. And I don't know how long this trend will continue. But given these kind of numbers last 2-3 quarters or so, I would just like to avoid Divi's Laboratories. I think Sun Pharma came with a very good set of numbers, and their strategy is sound in terms of focusing on specialty products. I think that could be the top pick within the pharma space. Having said that, a disclosure, we and our clients are invested in it.
All right. Just take note of the rupee as well.